I wanted to come on here and give you a quick lowdown and give you real raw data. When you work with me, Angela Torville, with the at-home team at North Point Mortgage, you are going to walk away from our meetings fully knowledgeable, knowing everything inside and out of all of your financing options, and you're going to feel confident when you're shopping out there in the market. Now, everyone talks about down payment, right? We know that's definitely one bucket of money that we need to fill. The other bucket a lot of people don't talk about, and it's such a gray clouded area, and it really shouldn't be, is your closing costs and your prepaids. So what the heck does that even mean, right? Some people will slap a percentage. Well, it's 3% of your purchase price. That's not necessarily true. Closing costs and prepaids are unique to your home. They're unique to your team. It's just such a specific thing. You can't put a blank stamp of percentage on it. Someone's giving that data to you because they don't really have the bottom line. So your loan officer is the one with the power there. And if they're not educating you on it, there's a red flag. You need to go get a second opinion. Just to reiterate how you can get a second opinion without affecting your credit score any more than that first pull, because we all know once we pull our credit, it goes down, is you have at least, or at the max, I would probably not push 3 mortgage inquiries in a 30-day period. If you can stick to 2, you're probably better off, but I do believe it's a 3-fer in 30 days, just so you can interview properly. But right now, I'm going to give you a little taste of the experience most of my clients get as a no matter what when we're working together. So we have this big old presentation that we go through that you can reference at any time that you'd like. But really quick, I'm just going to focus in on those closing costs and those prepaids. So on this screen here, you're going to see pretty much buckets, but I want to go right into this points. Points are sometimes referred to as discount points. This is a big piece, and it is a fee that's manipulating your interest rate. Now, it's not a bad thing, but if it's not being explained enough for you to make the decision if it's worth it for you and your family to actually pay discount points, then it is a bad thing, right? Because at the end of the day, you are the one who needs to be able to decide this. This is a closing cost, and this is a place where a lot of loan officers will manipulate costs to show you a beautiful lowest interest rate around, like unbelievably mouth-dropping low interest rate. But however, they're not telling you you have a huge fee on the back end. They're just saying, hey, it's closing costs. That's just what it is, right? Or you hear those stories of that last minute before closing, all of a sudden I need more money than I have, and I'm 40 days into this transaction, and now I can't buy this house, or now I have to go ask my grandmother for some money. So don't be with a team that's doing that to you. Ask for a loan estimate or a breakdown of your closing costs and look for discount points. You're going to see the manipulation there. And if they're not explaining it or they don't know how, they are not the loan officer for you. I also want to point out upfront mortgage insurance premium, funding fee, GUS fee, single premium. What this is basically PMI. PMI and a lump sum payment. There's multiple ways to pay it. Depending on what program you have will depend on how you can pay it. Can you finance it in? Do you have to pay it as a closing cost, raw money at closing? These are all going to be things your loan officer should be saying to you. I'm going to run right down into the fee detail. Again, this is something every single client of mine receives, no matter what. And what we're going to do is go over what the actual closing costs are. So anything that says title here or recording, these are going to be basically what we're seeing attorneys charging. So the settlement fee right here is straight up for their fee alone. Then they just have these miscellaneous things. Every real estate firm runs the show a little different, so their fees will differ depending on how they run the show and what they need to charge to be able to provide that service to you. Title coverage is definitely going to be something the attorney is providing too. It's insurance on the coverage. The lender's is always going to be required. The owner's coverage, not always required. That's on you, and it's optional. We have application fees and processing fees, appraisal fees, credit report fees, flood certificate fees. These are all the fees that the bank is charging you. Now, these fees should not change. Actually, there's considered to be no tolerance with these fees. So if they change after they were disclosed to you by your lender, you don't have to pay that by law. So be careful there. Now we get into prepaid. So escrowing is how your taxes and insurance are included in your mortgage payment. So if we're escrowing, we're going to definitely build up a reserve account here in order to make sure there's money in that escrow account. So if things change with your taxes and insurance on the annual reviews that they'll complete every year, there's money to pull and enough time to notify you of any mortgage payment changes. You're also always going to pay 1 full year of insurance at closing, regardless if you are escrowing or not. In a nutshell, that is literally your closing costs. If there's more than that, you need to have a really bigger conversation with that loan officer. If you find that they're stumbling, they're not quick on their toes, and they don't know these numbers inside and out, you need that second opinion. I'm always available if you want one. Link below to schedule a one-on-one session with me.